Thank you guys for taking out time on a Saturday and to listen to trying to understand how to invest in holiday home across the country. The All DRX team is here to help you out through the whole process. We'll we'll start the webinar in a minute. We have most of the attendees have joined. The final ones are joining in. Before we start, we'll quickly introduce the team. We have, I am Anishil, I am a CMO for All DRX. We also have Avijit, who heads supply and compliance for All DRX. We have Avinash, who is the co-founder and CEO for All DRX with us to answer any questions which will come up through the webinar and also to bring their valuable inputs wherever required. So we'll start with the webinar. So to bring into perspective, holiday homes or second homes has been a very fast growing market in the country for the last 3 years. It has been growing at almost 15% CAGR since 2021. All the states where second homes is one of the major real estate driver have grown significantly from 2021. Real estate, even though has grown everywhere from the last 3 years post-pandemic, but second home as a market has significantly grown faster than most asset classes across real estate. And there are a lot of factors which are basically driving this change. And we will, through the webinar, we will identify what are the factors, what are the locations, what do you need to see before investing, what are the different models available in full and fractional ownership, what do we need to be wary of, and how does the model work. So we'll start. I'll quickly set the agenda. We will talk about the hospitality trends for India in 2023, which actually have come out as amazing. We will talk about factors driving holiday home purchases across the country, why there is a significant uptick in holiday homes. Then we will get into what factors to consider while purchasing holiday homes. We will see the top locations which have been the darling in the country across the four north, east, south, and west. We will talk about rise of fractional ownership, different models, and what are the finer details or caveats of owning a holiday home fractionally versus owning a holiday home in full. Then we will deep dive into why Kerala is now an upcoming location for holiday home investing, and we'll go into our Kerala holiday home opportunity, how it works, and then we will open the forum for questions wherever required. To start with, hospitality trends in the country, tourist inflows in 2023 were at all-time high. Most of the states have crossed the 2019 levels. Pandemic was a blip, but post-pandemic revenge tourism has basically spiked tourism in every state. To give you a perspective, Kerala saw 2.3 crore tourist inflow in the country. That's like almost 1.5% of the population of the country visited Kerala in 2023. That's a huge number. Goa, Himachal, Meghalaya, JNK, to bring in different perspective of east, west, north, and south. All the states have been growing significantly. Goa saw a 30% increase in numbers as compared to 2022. Kerala saw a 15% increase in numbers as compared to 2022. And if you see half yearly and if you go back, do a little research on half yearly number for 2024, all the states are already at a 15-20% increase on the 2023 levels. And there are a lot of factors driving this. The population in the country is increasing. We are the most populated nation in the world. And with an aspiring middle class, a very, very big population of young individuals, we are seeing uptick in tourism because everyone wants to travel. Everyone wants to be aspirational. Whatever the reasons are, the rise of social media driving tourism, or in general people wanting to do so, is driving this change. If you see occupancy rate for in 2023, they were at 63-65% levels, which is a very good number for hospitality industry, and it was higher by 3 to 5% from previous year. That's like a 10%, 6 to 10% increase on the last year number, which is a significant change in a 1 year time. Even with ARR or revenue per room, the numbers have increased by 21 to 23% on 2022 levels. So in all factors, if you see the different parameters which define how this asset class will perform, the occupancy rates are increasing, the revenue rate per room are increasing, the tourism in every state is increasing. All of this is geared towards or getting towards another year of increase and sustained increase over the next few years in this industry for holiday home and for hospitality in general. Now we get into why Indians are increasingly getting attracted to this asset class. First and foremost, upcoming real estate asset class, commercial and residential, has been the main focus for perpetuity. Everyone has known about, you invest in land, you will get returns. You invest in a home, either you can use it or you can put it on rent. You invest in commercial real estate, you will get rental yields out of it. But this second home or holiday home and an asset class, which is income generating and also increasing in value, has basically been a post-pandemic boom. And because of new platform which are basically promoting this has started to become mainstream, with people who have access to capital are now looking at this as a real estate investment as well. The second thing is aspiration and high income. As I touched upon, the increasing population, increasing income with middle class and aspiration in the country, this is a no-brainer. Going back to Nikhil Kamat's post on how the middle class have increased and will increase, that number is basically doubling every 5 years, every 10 years. And the number of people going to the upper middle class and higher class is also increasing. So there is a lot more dispensable income in the country. People want to showcase their aspiration. They don't want to hoard any money anymore. They want to put it in real estate where they can showcase it. This has become a good place for people to showcase their income and also use it. Third major factor is passive income. Passive income from real estate historically has been driven by residential housing, but the rental returns in residential housings are very low as compared to commercial real estate. So if you are living in Bombay, you will see a 1.5% rental return coming to you every year on your investment. If you're in Bangalore, you will see like 3.5%, 4%. And this number at an average level will not be more than 4% across every city. Will range between 1 to 4% across. Now, this asset class, which is second homes, because it's a mix of income generation and consumption, can give any investor who is investing in it a 6 to 10% passive income, depending on the location, depending on the real estate they are in. But this is a realistic number which can be achieved. And this is also quoted by a lot of property managers which are looking to take up holiday homes and run it on your behalf. Fourth and foremost is lifestyle trend. In pandemic, everybody rushed outside. People were allowed to work from wherever they want to. Goa, Kerala, Himachal, Manali, Kasauli, every place became a hotspot for people to work out of. Even though that whole factor has changed to now towards work from office, but that aspiration or lifestyle trend is not going away. So even right now, people want to travel out. This is basically gearing or making people look at buying second homes across the location they frequently visit. For someone living in Delhi, they would very happy owning a holiday home in Kasauli or Goa. Someone living in Bangalore would love to have a holiday home in Kerala, irrespective of whatever weather conditions there are at this point of time. But people are looking to do that. But all of this, one side, but because this is a new industry, is also fraught with danger. Danger of you being you not making the right choice to invest, because there is not a lot of understanding of this asset class, how it will perform, what are the finer caveats. We have just tried to document the top three or four things which you should consider. Our team will tell all major factors to you in detail. So first is geography and weather prediction. Weather prediction with increasingly erratic weather patterns. Now we are facing problems of floods. We are facing problems of landslides. We are facing problem of access to a lot of locations. So this and also corrosion due to rising sea levels. So everywhere there is uncertainty. So that is why it is important to know where you are getting into, what kind of risk that location has. what kind of risk your building has. If is there an insurance? Is there earthquake protection in the building? What is inherent topographic risk because of it being in that location? These are the things. If you are looking to invest in a holiday home across anywhere in the country, you should be careful about. Second thing, occupancy. Now, people will tell you, "Oh, you take up a holiday home, it will be full throughout the year. You will make money, loads of money. You will make 15, 20% returns." You can make this much amount of returns, but you need to know again what are the occupancy rate in that location, and that is driven by the way people use those location as like getaway location. For example, for people in Bombay, Lonavala is more like a weekend outing. So you have lower occupancy on weekdays for Lonavala, while full occupancy over the weekends. For something like Goa, after pandemic, it is full throughout the year, no matter what the time of the year is. For Kerala, it is similar because access is there. Uh, weather is something which is not inhibiting your any access to that location. Kerala, Goa, you have access throughout the year. If you're going to far east with winters, you will not be able to get there. So occupancy goes down. So be careful depending on your consumption and your investment thesis on the location you would want to invest in. The third and the main point, entry price. If you are considering it as a real estate asset, entry price of the asset is of utmost value. Real estate, you make money on entry. The lower the price you get in, the higher money you will make both in capital appreciation and your rental yields. So it is very important to know what entry price you are getting into, what is the market parameters in that location, what is the market benchmark, what is the pan geography benchmarks, uh, and what is the deal being put on the table for you. The second thing, apart from your entry prices management, if you are looking to buy a holiday home in a different location, uh, where you are not staying, if you don't have the right management, it can go south very quickly. The real estate might not be of a lot of use for you in case it goes that way. So be careful with the management you have, because a good management will get the maximum returns for you. A bad management or a property management might actually destroy the property. So the entry price and management in terms of your returns coming in from and returns and experience coming in from your holiday home is very, very important. Now we'll quickly touch upon the top destinations for holiday home investments in the last, and these are the locations identified over the last 3-4 years, going through different reports, talking to different people. So if we say north, Dehradun, Shimla, Mussoorie, Kasauli, Rishikesh, Haridwar has come up as the top locations to invest in holiday home. One, because of access to these locations. Two, because of ease. These have historically been tourist places, and people are allowed to buy houses. If you go east, there are fewer options in the east. One, because at a lot of places, non-state residents can't buy it. But Puri, Darjeeling, Mandarmani, basically West Bengal, Orissa, and Mandarmani is also in West Bengal. And some locations in Assam are now picking up as tourist destination or holiday home investment destination, just because the accessibility to east is limited. That is why they have not come up as fast as other locations. But as more accessibility is done with the government pushing across a new set of airports across the country in tier 2 and tier 3 towns, East will also start developing as a tourist hotspot and a holiday home investment destination. South is a no-brainer. There are so many places you can visit. There are so many places you can invest. Every place has access. You want to Bangalore, like the amount of big airports across Bangalore, Kerala, Karnataka, Kerala, Tamil Nadu are a lot. You can reach any location in any of the 3 or 4 southern states without any problem. That basically is showing here that Nandi Hills around Bangalore, Ooty, Yerkot, Coorg, Munnar, Pondicherry are the top destinations for people to invest in holiday homes in the south of India. West has been the darling. Goa, Lonavala, Lavasa, Sindhudurg, Alibag. These have been the choice for people to invest in, both from a real estate point of view and from an experience point of view. These have grown significantly in the last 2-3 years. So the prices also have increased a little. So it is important to know where you are getting into. But that said, all of these locations have been the top are the top. People flock to these locations. These drive the maximum amount of tourist inflow in the states they are operating in or they are located in. Now we have touched upon the how our tourism has been impacted post COVID. We have touched upon how to choose holiday homes and where to invest. We have touched upon the locations and where to invest. Now we are touching upon the concept of fractional ownership and how this is changing the way people invest in holiday homes. This is not a new concept. People have been fractionally owning real estate together with friends and family for a while. There are different ways to do it, but organized way to do so has picked up in the country since 2020. There are now multiple players which are letting you fractionally invest in land, in commercial real estate, in residential housing, and holiday homes. There are multiple players which let you invest into different assets, different locations, in different types of asset. You can invest into a home, you can invest into a villa, you can invest into a bungalow. There are multiple options available, but the investment and the returns can be categorized into three main models. One, which is investment only. You are investing in fractionally into a holiday home with just a thesis of making returns. You have no access to using the holiday home, but the property manager or the fractional investment platform will generate revenue and get you returns. Generally, returns range, if you're not using it, generally returns range between 5 to 8% rental yields and another 6 to 8% capital appreciation per year. So it can go to like a 12 to 14% IRR on your investment every year. Second is investment plus usage. Here you again are a part owner of a holiday home, but you get few nights for consumption, while the remaining nights are used to generate revenue by renting it out through different platforms. It could be the property manager's self platform, it could be Make My Trip, it could be Agoda. So think of it like if there are 100 nights, 20 nights would be for the owners, 80 nights would be for generating returns. You will get access to use it. You will also get some returns out of it. Your rental return in this case will be a little lower because you are using some nights, while capital appreciation will be in the same range. The third model is usage only. This is straightforward. You are part owner using the new age investment model of a special purpose vehicle, but you have the property is not being rented out. If there are 8 owners and there are 12 months, you have 45 days of access to the property. You can use it as per yourself. But in this model, there is extra cost because there are maintenance costs included. In other model, the revenue being generated to take account into it. In this case, there will be extra cost of running this holiday home if it is a usage only model. Now, getting into dividing how fractional investment works or differs from full ownership, we are divided into five main parts, and we'll talk about what's good and what's bad about it. Capital, again, very simple to answer. Full ownership, you will shell out multi crores to own a good big holiday home in Goa, while you can own it fractionally at 1/8 or 1/10 of the capital, depending how many co-owners are there with you. So your entry capital goes down 1/10, which is a significant cost decrease. Second is rights and usage. You have full right and ownership. If you have full ownership, you have to maintain it, you have to do it, all the paperwork is in your name. So there is hassle because everything has to be done by you, from registry to due diligence to getting the sale deed in place, to making sure the property is right. While with fractional ownership, you have partial usage rights because it is defined in the structure you are getting into. The ownership is digital because you are investing digitally and fractionally, but your hassle of investing in it is taken care of. You don't have to do the due diligence, you don't have to worry about the sale deed, you don't have to worry about the legal diligence, you don't have to worry about negotiation. All of it is done on your behalf or on the group's behalf by the property manager. So you get a better deal without the hassle of doing it yourself. So both pros and cons are there on both models. Management, with full ownership, again, very simple. You are the owner, you will manage it. Whatever cost will come in, whatever pain of managing it will come in, has to be borne by you in case you are a full owner. While with fractional ownership, you have a property manager in place, which is which is your face in all of these things. So you can just sit at home and relax while the property manager takes care of the management and the issues. And they are experts at this. So they are equipped to solve all of these problems together. The fourth, returns. With full ownership, you always have the risk that if the asset does not perform well or the location does not turn out to be right, you might not get good returns. Or there's also that flip side that if it is an amazing place, you will get the best of the return. So that risk reward ratio in this has to be uh, like identified very clearly with full ownership. With fractional ownership, all the things are defined: what kind of returns will be generated, what kind of cost will be incurred, where the locations are, what is the final money in your hand. These things will be defined in case of fractional ownership. Avijit, you're raising hand. Avijit, if you want to speak, feel free to.
Yeah, I mean, we can talk about it. What is the question? Sorry, can you hear me?
I can hear you. I've not seen a question. Questions we were going to take at the last. We have not had a question.
And I
Oh,
see a question, I think.
I've seen a raised hand. Hi, Suresh. You have a question. Please feel free to ask, or you can just type it on the chat. We'll answer it.
I think there is a question. Appreciate assurance in lieu of legal aspects.
Yeah, Vijay.
I think, can we take this at the end, Manishil? Can you finish?
So let the questions pile up. We will take questions at the end together. A lot of questions might be answered in the PPT itself. Okay, so we'll continue. We'll take the questions at the end. So we were at returns. It are consistent returns. So we'll get to last, liquidity. So again, there is both pros and cons. With full ownership, for a bigger sale, it can take anywhere from 2 months to 6 months to 8 months to a year, depending on the location. If it is a good property, might be sold quickly. If it is not a good property, might take time, might not get you the number you're looking for in terms of sale. With fractional ownership, because you are part owner, if you want to exit partially, you can exit partially. You can sell your share of the holiday home and exit. So there is easier exit with fractional ownership. With full ownership, then it can go either ways. Now, it can be very difficult, but it can be very easy as well. So full ownership has the whole risk profile from good to bad. With fractional ownership, you are bang in the middle. Everything is declared to you on what will happen, what can happen. So we've talked about fractional ownership, why fractional ownership, what are the finer caveats. Now we'll get into why Kerala, which is why we are here. Holiday homes, we have talked about holiday homes growing across the country. Goa has significantly increased. Himachal, Chandigarh, Uttarakhand, all of these locations have been the darling for a while. They have seen significant investment coming in. Kerala has seen it. Kerala is seeing it right now. One, Kerala has good access to infra. There are multiple rail, airport, and road routes which take to the city. Kochi and Trivandrum are one of the biggest airports which drive traffic or drive people into the state. Mangalore also serves as a good entry location, even though based in Karnataka, is good entry location for people to go towards Kerala. Two, tourist hub and growing. Kerala has been a tourist hub for a while, but now there is significant uptick in tourism coming to the state. And because it is not just a party destination, you have different tourism coming here. You have Ayurveda tourism, you have beaches, you have backwaters, you have mountains. So all of this combined is basically driving both domestic and foreign tourism into the state. And this is a state called God's own country, is known across the world. There has been a 15% year-on-year growth in tourists in the state as compared to 2022. And that percentage for the first half of 2024 is a little more than 20% right now. Third thing, NRI investment destination. You have a lot of people from the south living outside. Kerala real estate is now becoming a preferred choice of investing for NRIs. They are post-COVID, they are investing significantly into Kerala. And holiday home is a preferred investment choice because the people who are living outside, they want to have a second home when they come back to the country and just enjoy it. Fourth and foremost, higher yields. With increase in prices across Goa, Himachal, your yields are a little moderated. Kerala, because there has been lack of supply of holiday homes in the state and lower real estate prices, you command higher rental yields as compared to the more known or more glamorous states. So if you're looking to invest, there are higher yields to be made in the state because your entry prices for real estate are lower. So we just so why Kerala? Kerala again. We have talked about why Kerala. Kerala is an amazing place to go to enjoy. Now it's coming across as an amazing place to invest as well, and that is why we have brought across all DRX has brought across holiday home investment, fractional holiday home investment opportunity in Kerala, where it we will where the opportunity gets you rental income, it gets you complimentary stays, and also has significant growth potential in terms of real estate because you are coming in early in the journey of that state growing as a real estate powerhouse, or at least real estate powerhouse from a holiday home point of view. So we're starting with Munnar, uh, and we have the first purchase in the portfolio is Aveda Mountain and Mist Resort, which is based out of Munnar. The starting rental returns are 6.3% per year. There are complimentary nights built along with this, and their minimum investment is 15 lakhs. Before we talk a little more about the property and the portfolio, we want to talk about how fractional investing differs a little why if you are at all DRX as compared to other platform. So if you're investing with any other fractional investing platform, you are investing in a single property. For example, you will with a platform X, you will invest in a property Y in Alibag or in Goa. Your returns, your consumption is only geared to that property. If something goes wrong, there is always a risk associated with it. So at all DRX, to cater to this whole possibility of something not working out, we instead of focusing on one holiday home and fractionalizing it and doing it, we create a portfolio of holiday homes across the state. So, for example, in a Kerala holiday home investment opportunity, there will be a special purpose vehicle, which is a company only dedicated to buying real estate, where you will become a digital shareholder, will buy real estate across the state. So real estate one in this case is Munnar, which we are buying. Then we are going to buy real estate across Munnar. We'll buy it in Kochi. We'll buy it in Alipi. We'll buy it in Kovalam. So there will be a mix of real estate across the main tourist destination in the state. The buying will happen over the next 24 to 48 months. And if you invest in an opportunity like this, your risk is diversified because you're not investing in a single property, you are investing in a bouquet of property. Think of like a mutual fund where you're investing in a bouquet of equities, but someone else is managing it for you. Very similar to it, but here it is real estate and you're fractionally investing in it. So just to summarize the 3 points, you invest in a portfolio of real estate, or in this case, a portfolio of holiday home, which will be spread across the main tourist locations in Kerala. You will come in at a defined purchase price, which will be dependent on the property purchases in the portfolio. And similarly, because this is like a time-bound thing, real estate in the country is increasing in value every year. The earlier someone comes in, the higher capital appreciation potential and higher rental potential they have. So this is how the portfolio will work. This is our main opportunity which we have live. The location is in Munnar. Munnar is one of the top destinations in the state and in the country for people to come to. It is located in the mountains, very close, not very close to the beach, but you can go from Munnar to the beach, obviously. But yeah, if you're looking to enjoy mountains and Kerala, this is the place to be. You have complimentary nights in the resort. These are some photos of the resort. You will find it on Agoda, or you'll find it on Make My Trip. You can see more photos, videos there. You'll also see videos of it on our YouTube page, where this is a very beautiful resort. If I am going to Munnar, I will definitely love to stay here. So before we close this webinar specifically for Kerala, would just put across, we also all DRX also has opportunities to fractionally invest in holiday homes in Goa and land in Bangalore and Hyderabad, and residential housing in Bangalore. So these are the other opportunities. Our team will reach out to everyone who has joined in with all the details. If in case you have other interest as well, we'll help you out with your investing. So we'll open the forum for questions. So the first question we have, Abhijit, so it's appreciate assurance in lieu of legal aspect. Just to reiterate, Abhijit would be the right person to help you out with the background of a long background in real estate with Knight Frank and doing this. How fractional investing basically solves for legal aspect. Abhijit, over to you.
So thanks, Vinicius. Hi, Suresh. Great question. In terms of legal aspects, each property which is purchased by a SPV goes through multiple due diligences. One of them, and the most important one, is obviously the legal due diligence. So a very well-known national level law firm called KSK has already completed the legal due diligence of this property. So all the title is clear. The seller, we have already signed an MOU with the seller. We will also have an operator agreement with Veda Resorts. So in that terms, all the legal aspects are quite clear. I hope that answers your question.
Yes, yes, it does. The second question we have from Raj is what would be the exit load when you are looking to invest, exit the SPV?
Yes, I think we just need to go back a little bit and talk about the structure. Can you, Manish, go back to that slide where you had the fractional investing structure?
Is it show? Can you see it?
Yes, yes. See, when I think there are a few further questions by Vikram, so I need to answer all of them together. So when you are investing in the portfolio, you come in as a equity plus debt investor in the SPV, which is basically the LLP. Now there are two kinds of exit load which we can foresee. So if you hold your investment till the property is sold, at that point there would be a different exit load. And if you and obviously that would also include any brokerage paid for the sale of the property, and then the distributions to be done to the fractional owners. That could be anywhere around 2%, let's say. But let's say for you're a short-term investor, or you're looking for a medium term and you want to exit in, let's say, 1 to 5 years before the property is sold. You want to sell your, offload your stake digitally through the all DRX platform. In that case, you will have a 1% plus legal fees plus GST, which will be attracted as an exit load. I hope, Raj, that answers your question.
Just to quickly add to it, when there is also an aspect of exit load while investing with other fractional CRE platform, where, for example, if you are making a 15% IRR, they will charge you an extra 10-15% exit load over any returns over 10%. So in this case, in that particular case, on that 5%, which is over 10%, they will charge another 15% exit load. Do we have that in place here? Is the second question.
Yeah, so there is no carry, as you say, as you went as carry above a certain minimum returns. Is there a percentage profit set with the platform? No.
Okay, fine. So the next question from Mr. Vikram is, when we say digital ownership, we don't get partial property registered in investor's name. Does all DRX buy the property in full or partial?
Vikram, I think this slide would have answered your question. The properties are purchased through an LLP. The title lies with the LLP. All of you become stakeholders in the LLP.
All DRX has no ownership. We are not. All DRX is not
No,
buying
no.
the property. The SPV is buying the property,
Correct, correct,
and all DRX is the property manager.
correct. Plus, all DRX also has skin in the game.
Yeah.
All DRX holds 10% of all SPVs.
Yeah. The third question is, when you say you can get easier exit in fractional ownership, can we double click? We still need to find someone to buy the fraction, and that has to be done through all DRX, is the question.
Yes, you are right, Vikram. So we are creating that, or rather, we have created that marketplace wherein you can trade these fractions. So the 15 lakhs number which Manish will show, you will obviously own what we called alt square foot, which is basically units. So these units can be bought and sold on a marketplace. Yes, you need to have the buyers if you want to sell, but we are creating that marketplace. We today have almost 30,000 registered users, and as the depth of the market grows, we will definitely have more liquidity, and you can easily sell your fractions. Let's say you get 50 units when you invest this 15 lakh, so you can obviously sell 1, 2, 5, 10, whatever you want, depending on
Yeah.
whether you're a buyer.
And the depth of that marketplace is increasing. Our sales manager will reach out to you and make you understand the process in detail, that how you can partially exit or fully exit a property as when you want to do it. The next question again from Mr. Vikram is, can we double click on the bouquet of properties? When I buy when I buy fractionally in one property, how does multiple property across the straight reduce my risk? Will the investment get distributed across properties that all DRX buys? So I just want to quickly set the base context, and Abhijit, over to you to answer it in detail. You as an investor are investing into the LLP. You are a part owner of the LLP. LLP will buy real estate across the state. So right now we are buying in Munnar. Next we might buy in Kochi. Next we might buy in Kovalam. Next we might buy in LLP. So everything will keep buying under the LLP where you are a fractional owner. More fractional owners will come onto the picture. So if you are investor here, the value of the LLP will be defined on the value of real estate below it, and your risk is diversified because your returns are being generated from all. How the weightages will work, it will depend on what property is coming at what valuation, at what timelines. And again, our sales manager would be better equipped to talk to you in detail about how the sale will happen, how will weightages be normalized across different properties, and how your returns will be generated. Avijay, anything to add to it?
No, no, no. I mean, that pretty much answers it unless Vikram has a follow-up question.
Yeah. So what is the overall returns one can expect? How do I get my money back when I want it? Overall returns, and we want to be very conservative here. Overall returns here in this particular case will be between 10 to 12%. It can be more, but this is what we believe we can deliver in a short term to mid term scenario. Long term, it could be higher. Where it will be a mix of rental returns and capital appreciation on the property. When you want to get your money back, so there are two parts to it. The debt part, because you're a part owner in the LLP, your debt part can be liquidated through our marketplace. The equity part will be exited through a secondary sale of your part. And again, the more details will be shared with you on the process, on the marketplace, on how you can come in and how you can exit. The next question is how fractional investing ownership could be utilized for commercial real estate like mall or retail space. This model is already existing. There are players in the market like Strata and PropShare who are specializing in commercial real estate fractional commercial real estate investing, where they're letting you invest in a mall or in a retail space. Our team would be very happy to tell you more about the opportunities which are there in the market across all fractional opportunities. We have fractional across land, holiday homes, and residential housing. The next question by Mr. Vikram is, I have seen some of the properties where all DRX has investment in Bangalore. Most cases, it is in the range of 20 to 40%. what about the remainder who owns it? If they decide to exit or change something, how is that handled? Uh, I'm not. So I'll try to answer it in the way I understand the question. Uh, we have seen where all DRX investment in Bangalore, most cases it is range of 20 to 40%. Uh, I I don't know where 20 to 40% thing comes in, but we have investment opportunities in Bangalore where we have again a portfolio of land or developed land in Bangalore where we buy plotted development, release completed release order received plotted development land in Bangalore. We also have completed income generating residential housing in Bangalore where investors, fractional investors own a part of it. If they decide to exit it, and as we called out in the last two questions, if you want to exit, your exit happens in two ways: through sale of the part of your debt through our marketplace, and through a sale of your partnership rights through a secondary sale. So the next question is, what is the base of rental projections of 6%, above 6% in Kerala? So that is dependent on the average room rates and the price of the property you are coming in at. In our case, and we'll be very happy to share the projections on how they are done. You can expect 6.5% rental returns coming in from the year one for your investment into Kerala Holiday Home. Mr. Vikram has asked,
Initially, you're on mute.
sorry, just adding more to the last point. We have a business. We have an agreement with the business operator. We have a complete plan with them on depending on the historic numbers in Munnar, the real estate prices in Munnar, and how this 6% will be generated. So we'll be very happy to share all the details with you. Mr. Vikram has asked what is the registered number of users now. It is more than 25,000, closer to 30,000 at 30,000 at this point of time. Vikram has asked, can he be unmuted? We can. I'll just check. Vikram, you are allowed to talk in case you want to. Even our sales manager would be there to answer all your queries. How do we monitor the income by the villa, Abhijit? Till Vikram comes in and asks a question, if he has any,
Yeah.
you
Right.
can answer.
Right. Raj, it's not only one villa. We are starting with Veda, a few villas, but we'll have obviously more properties in the LLP across Kerala. We hope to, as Manishi said. So what happens is all the income, all the properties that are in the LLP and generate income. So the LLP, all the LLPs have their own chartered accountants and auditors, and quarterly reports will obviously be given. As master property manager, Alt DRX will monitor the operator who operates it, and obviously there is an agreement with the operator for either a minimum guarantee or plus a revenue share or a profit share. So all of that is monitored by the by Alt, and obviously the results, the income statements, the P&L of the LLP will be published and be available to all the existing investors on a quarterly basis. So you will be able to monitor not only the income of each villa, but more so the total income of the LLP. I hope that answers your question, Raj.
So, Mr. Vikram, it says investment is 43% in the chat. So for all your specific queries and for this specific query, I will connect with my sales head and we will reach out to you. So we'll answer all your individual queries in detail.
Okay.
So we'll wait for another couple of minutes for any other questions. If someone else has any question apart from what has been answered, we would be very happy to answer all of them. Otherwise, we'll close the webinar in a couple of minutes. We'll share the recording of the webinar with people along with the deck for your usage whenever you want. I don't. So right now we don't have any other questions. Uh, we we'll close this webinar. We very happy to have all you guys here on us. Oh, Abhijit, there's a question. Mr. Raj, I'm changing you're allowed to talk. You can ask your question. Okay, so I think two more questions have come in. What has been the historical price jump in this property? The prices from 2021 to 2024 have increased in the range of 25 to 30%. So that is almost 8 to 10% increase in value every year over the last 3 years. Do we get financial in the public domains? Abhijit, I don't think so. Private financial for this will be in public domains.
No, this will be the P&Ls and everything will be available for the investors.
Yes.
People who have invested.
So if you're an investor, you will get all the disclosures, but it is not available for public consumption. Raj, we have allowed for you to talk in case you have a questions. In case you have a question, we'll be happy to answer. Otherwise, this was the last question which had come up. We'll close the call in a minute. Yeah. We'll connect with Raj separately and answer this anyways. Fine. Thank you guys. Thank you guys for taking guys and girls for taking out time on a Saturday to listen to this in detail. And thank you, Abhijit, for answering all the questions to the best of abilities. Any specific questions, any specific queries, we'll be happy to answer. Our team will reach out to you with the recording and the deck. And thank you guys. We'll close the call. We'll send out everything post this call. Cool. Thank you.
Everyone, have a nice weekend.